Welcome to Markets Now. I'm Michelle Rook along with Bryan Doherty with Total Farm Marketing, and mostly higher prices on Friday with the exception of some of the deferred lean hog futures. But we are in a full-blown weather rally in the grains, Bryan, big up week. And everybody wants to know how high is this thing going to go, especially if we come back in Monday night and the weather still looks dry.
Yeah, so let's start with where we thought it might go to. So if you were a follower of like a corn chart, uh, November soybean chart, um, you had this really nice inverted head and shoulders formation. Now that's language for technicals, and technical means looking at prices on charts. But you had this formation that pointed to about the 585, 590 area in December corn. Lo and behold, the market went right up to that, and November beans pushing toward $14 or better. Market did that. So when you see those fulfilled, then the question is, well, what next? And to your point, it all depends on weather, because weather is the most dominant variable that will determine production and yield and size and carry out. So we've talked all winter about slow exports. Well, slow exports, we might cut those to 300 million this year. Production could be changed a billion or 2 billion bushels if this dry weather continues. So those are big numbers, but that's how the market needs to view the idea that if this dry weather sticks around, that corn prices, soybean prices could move very rapidly. It takes a while to get a rally started, and then if you have some catalyst to connect the rally to additional higher prices, in this case dry weather, it doesn't take long at all to make the next leg higher, which I would suspect in corn, if we break through $6, touch 637, break through that, then you got to run towards 7. Do you run toward 8? Maybe, but that's the acceleration phase that would take you to $8 if the weather stays adverse.
Yeah, I mean, when you look at all the technicals, we're above 100-day moving averages in both corn and soybeans, old crop and new crop. Didn't take long to get there. And so, from a technical standpoint, the funds got caught kind of leaning the wrong way. So they could actually add quite a bit more to this length that they're trying to put on. Now we're covering those shorts, right?
Absolutely right. First cover shorts and then go long. And let's look behind the scenes a little bit too, that things that might be supporting the market some, because we had strength right across the board, corn, beans, and wheat. And when you look at the largest buyer, China, they've been doing some things economically to stimulate their economy. And consequently, you got to think there's some where there's a little smoke there, there's fire, that they too could end up being more aggressive buyers, especially if they see that there could be some issues. One of the things that buyers have a tendency to do when prices are downtrending is sort of become lethargic, and they buy as needed or just in time inventories. All of a sudden that changes when the market starts to grab hold, and then some pain points start to be triggered. So we're in that window right here where if this dry weather continues, the idea of rationing supply certainly has impact. The other thing we have to keep note of is basis levels on the west and the east through the roof. There's a demand, and there's a looking for corn. Make sure they have the inventory. And this reflects back on last year's smaller crop. There's still some debate as to the yield there. And I think it even goes back to 2019 when we had the light test weight crop and lower yield due to a cool, wet spring.
Yeah. Let's also talk about the fact that the products have been pushing the soybeans. A big up week in soybean meal by $20. Soybean oil was up almost 600 points. And there seems to be a lot of demand for veg oil right now.
There is, and there's strength in the Malaysian palm oil markets, and there's a little bit of supply concern there. But you talk about canola, maybe some concerns in production there, rapeseed. So you've got these other components. But the big picture perspective, too, is that the Fed didn't raise rates. The stock market rebounded. There's kind of a renewed enthusiasm, not only in the commodity market, but there is in the equity markets as well. And with stimulus in China, all of a sudden you look at things from a different angle. And the angle is, hey, the vegetable oil market is now all of a sudden taking over. It was a dog a month ago. Things have abruptly changed. It's now the leader of the soy complex. So you've got some real demand starting to pour into these markets to try and benefit from low prices. And consequently, when that demand hits speculative buying at the same time, it just exasperates and pushes the market higher.
All right, so here's the weekly closes, Bryan. July corn up 36, December up 67, July beans up 80, November up 138. Is this a selling opportunity?
Well, it is if you've got nothing sold. You shouldn't neglect a 3-day weekend, and we know how weather can change things. If it were my crop and I'm light on sales, sure, I'm dribbling some sales in here. I'm always a fan of selling on value. What is value? Well, value to me is if you can sell a product for more than the cost to produce, and this is your starting point, use that as your pivot point. So I would start with that, but really, I think the advantage right now is to the option market. Utilize your put options. They have a function when you buy a put. You're investing in something that puts a price floor in. You're not married to it, but those could be critical to establishing the right type of price flooring mechanism, peace of mind, sleep at night, all of those things. That's what a put option does. You just have to decide what strike price you want to buy and how far out in time you want to go. Typically, December corn for new crop corn, November for new crop soybeans. But there are short dated options that have a shorter window if you prefer to spend a little less. My let's call it warning there is the cost per day though is going to be more if you average it out compared to the traditional December and November.
We had a strong close on Friday in the wheat market, a higher weekly close. So, was the wheat market just following corn and soybeans, or did we finally get, especially in Chicago wheat, some of those funds to have to blow out of that short position they've had?
Well, you've got a nice chart formation there too. Great Friday there. But let me suggest this in talking to wheat producers throughout the Midwest that haven't received much rain. There's a major league concern of how wheat quality is headed right down the tube, or at
Mm.
least expectations for quantity. If you've got wheat heading out or close to heading out and you haven't had rain in 3 or 4 weeks, this is problematic. So I think it's also a combination of not only the speculative interest and kind of the worldview but it's also symptomatic of our crops here at home. A lot of talk of spring wheat. Some of it got in late. Some of it's in dry weather right now. Not ideal. Soft red winter, not ideal. Hard red winter, not ideal. Canadian wheat, not ideal. Drier in Northern Europe, not ideal. So you've got some of these things happening. You got a war. Let's not forget that. Ukraine's not going to push as much wheat into the market in the year ahead. And in fact, from the last I've read, again, it seems like Russia's very reluctant to extend the corridor. So the wheat market has kind of been the the stepchild here
Yeah.
lately, but all of a sudden, I wouldn't be shocked if it's the leader. Remember, in theory, because we don't have good data, about 800 million bushels of Chinese wheat were affected by heavy rains and flooding.
So, if you think that wheat might take over as the leader, do you sell here, especially off the combine with harvest roll in here, or do you wait?
I wouldn't. I think we're too tight on supply. Maybe if you're in an area that has soft red winter wheats really well and you don't want to tie up your storage, then let it go. Then retain the ownership with some kind of an option strategy where you have fixed risk. But I think wheat has that potential all of a sudden to move a lot faster and further than people expect. I know it sounds kind of bold, but it has really been in a downtrend for a long time, and exportable supplies coming into this year we're at 15-year lows from exporting countries. So the world's been kind of getting by with this corridor and defensive posturing, the fund selling, and pushing prices. But I don't know if that's really indicative of world supplies.
Yeah, wheat has not really respected those low stocks from a world basis. Okay, cattle market. Nice bounce on Friday. We actually ended kind of sideways for the week. So the fact that we bounced off of support areas here in the face of lower cash trade this week, do you think we have a short term bottom in?
It looks like it, but I'm not ready to go out on a limb that far. We had a major accelerating market upward, and I know the futures never got to where cash is, but you had this
Right.
massive bearish key reversal at the top of acceleration. And there again, we talk about market moves. Often there's three phases, and the third phase is acceleration. You accelerate toward the top. It just blows off. It goes up for a variety of reasons, and so that's still in place. So if we do bounce here, I'm going to be skeptical. I'm not a real bear on cattle because I still think that's a supply-driven market, but I am a little bit concerned that and maybe the tipping point might be that the Fed didn't raise rates, is that consumer demand. I just don't know how fast and hard they can chase this beef market upward, in particular when you've got ample competing supplies. So the theory was, well, the consumer is they're paying higher for everything and it's just in the mix. I think people are going to put a sharper pencil to that. Um, So maybe short-term low. I'm not a bear, but I defend that market with put options and leave the top side open as well.
Yeah, we'll see if those key reversals hold or not. And finally, Hogs, we've had a nice rally off the contract lows, maybe a little profit taking in the deferred contracts today. But do you think that market has a chance to continue to improve here?
I do. I think that's a healthy market. I think what we're going to find on the next quarterly hogs and pigs report is that we've probably liquidated quite a few sows.
Yeah.
And I think there's quite a few gilts that went into that mix too. And maybe that helped the pressure prices some. But I think that the hog herd is not expanding. It's likely contracting. And if demand swings over, shifts over, and there again, we're hopeful that we can get the overseas demand to hold in there. I'm not necessarily a bull on hogs, but I'm certainly not. I think they were oversold, and I think they're getting back to respectable levels that you can argue this might be where they should be reasonably priced.
Yeah, we'll see if the funds are done covering their short position there too. And if you're keeping score at home for the week, Brian, August hogs were up $6.72.5. So pretty respectable week there
That's a
overall.
good percentage change. You bet in
Yeah,
any
it is.
market. Yeah.
All right. Thanks for joining us, Brian Doherty with Total Farm Marketing. That's Markets Now.